Good day. My name's Warren Davison, and I'll be taking you through the PSG Wealth Offshore Solutions for January 2022. After a strong 2021, it has been a rough start to the year for equity markets. Inflation, concerns about central bank tightening, and tension in Eastern Europe roiled markets and led to a sharp increase in volatility. Developed market equities ended the month down 5.3%, although emerging markets outperformed, ending January down only 1.9%. Rallying oil and gas prices and higher US Treasury yields saw energy and financial stocks significantly outperform the rest of the market, which contributed to the largest monthly outperformance of value versus growth in more than 20 years. Growth stocks trading at steep valuations came under increased selling pressure, particularly in sectors that had been beneficiaries of the change in consumer patterns during the pandemic. Market participants rotated out of stay-at-home stocks, where the revenue growth of the pandemic years is likely to be repeated in the future. Equally harmful for sentiment towards growth stocks was the fear of tightening liquidity and higher financing costs in the coming quarters. Despite this hefty underperformance, growth indices are still trading at a large premium to their value indices, particularly compared to pre-pandemic levels. Value stocks benefited from growing conviction that central banks will be able to raise rates materially away from the zero bound. This is partly because financials, a large component of the current basket of value stocks, tend to benefit from rising government bond yields. Now, turning to the PSG Wealth Solutions, and firstly looking at the PSG Wealth Risk Radar. What we can see is 4 funds appearing on the radar this month. In the Global Moderate, we have the BlackRock Global Funds Global Allocation. Within the Global Flexible, we have Baillie Gifford Managed on the quantitative radar and UBS Sustainable Growth on the qualitative radar. And in the Global Creator, we have T. Rowe Price Global Focus Growth Equity and Threadneedle Global Select. Looking at the overall peer group rankings, what we can see is the performance of these funds remained strong over the respective investment horizons, as well as the since inception numbers. Over the 1 month, we saw a strong comeback in the Global Preserver, with first quartile performance for both the USD and GBP class. The Global Moderate had a moderate month, placing 131st in the sector and in the third quartile, whereas our more aggressive funds, namely the Global Flexible and Global Creator, had a worse off month, landing themselves in the fourth quarter. Turning now to the individual funds. For the Global Preserver, the fund had a strong month, outperforming the sector by 54 basis points and 95 basis points in the USD and GBP class respectively. This placed the fund in the first quartile over the 1 month period. Over the holding period, however, the fund slightly lags its peer group by 20 basis points in the USD class and 24 basis points in the GBP class. And as we can see from the ranking table, this places the fund in the third quartile. However, when looking at the longer term numbers, what we can see is the fund still remains well positioned within the first and second quartile. For the Global Moderate, the fund followed the broad global indices, falling 4.17% in absolute returns, and unfortunately lagged the peer group average by 47 basis points. This caused the fund to place 131st, which placed it in the third quartile. Over the 5-year holding period, however, the fund remains well above the sector average by 81 basis points per annum. As you can see over that longer term period, this does in fact place the fund well within that second quartile. For the Global Flexible, the fund followed global index markets, and as you can see, fell 6.69% in the USD flexible class and 6.05% in the global flexible GBP class. Both of these classes unfortunately underperformed their sector over the month, and as you can see, placed them in the fourth quartile relative to peers. This, however, has not impacted their longer-term 7-year holding period. As we can see, the fund remains well above that sector average by 5.5% per annum in the USD class and 5.18% in the GBP class. This places the fund well within that first quartile over the 7-year rank as well as over that since inception period. Lastly, for the global creator, as we can see, the fund also lagged the peer group average by 1.96%. This again, unfortunately, placed the fund in the fourth quartile over that 1-month period. However, when looking at the 7-year holding period, we can see that the fund remains well above the sector average by 2.85% per annum over a 7-year period and 2.15% over its since inception period. As we can see here, the fund is still placed in the first quartile over its 7-year and since inception period. So the short-term sell-off still has not impacted those longer-term numbers. Finally, just having a summary of the 3-pillar approach. What you can see from this slide is that for each of the funds, the PSG Wealth multi-management team are still achieving their consistent above-average performance at below-average risk whilst maintaining a competitive price relative to peers in the market. Thank you for watching this update, and please do contact us should you need anything further.